Hello there. Welcome to The Open right here on BNN Bloomberg. I'm Andrew Bell. Happy New Year, everybody. Let's get to the big stories we are bringing you from the BNN Bloomberg newsroom. Prime Minister Mark Carney says Canada is working to expand oil markets in Asia. Talking to reporters in Paris, Carney said he sees Canadian oil as being low risk compared to Venezuelan crude, and he says that will help it remain competitive. In a social media post, the Conservative leader, Pierre Poilievre, urged the Liberals to immediately approve a pipeline to the Pacific coast on the possibility of an end to American sanctions on Venezuelan oil. Suncor says it has achieved its production targets 1 year earlier than planned. The Calgary-based energy giant says this was driven by record production in the fourth quarter of last year, as well as its best ever annual upstream output, refining and utilization. Suncor will provide more details and results on its results and outlook when the earnings are released in early February. And copper is expanding and extending a powerful rally after topping $13,000 US a ton for the first time. That's in London trading. We're showing you the New York price there per pound. There are expectations that the Trump administration may introduce a tariff on refined metal, and that has drawn huge volumes of inventory into the United States. This has also potentially left the rest of the world short of the metal as miners struggle to boost output. Copper's role in high-growth sectors such as renewable energy and AI infrastructure has also fueled demand. U.S. futures looking set for a pretty flat open this morning. Let's see how the TSX traded yesterday. It held up, even though we saw selling in some Canadian energy stocks amid fears of competition from higher flows of Venezuelan oil. Speaking of oil, let's have a look at crude prices this morning. They are rallying a little, up about 0.5%, but still stuck below $60. And let's check out gold after its magnificent year yesterday, also pointing up a magnificent year last year, also pointing up a little bit this morning. And finally, let's check out the Canadian dollar. It's pretty flat against its U.S. counterpart right now after a sharp rally in the past couple of months. And finally, Bitcoin. Let's see how the biggest crypto is doing. Still stuck. Bloomberg reports that there's lots of speculation, options trading, etc., among crypto bulls who see it getting back to that 100K mark. Markets are still trying to make sense of the capture of Venezuela's Nicolas Maduro by U.S. forces. Let's get some perspective on where stocks and bonds might be headed here. We're joined by Brent Joyce, Chief Investment Officer and Chief Investment Strategist at BMO Private Investment Council and BMO Private Wealth. Always great to see you, Brent. Thanks very much indeed for joining us. Off the top, of course, we just don't know. The Americans have been incredibly vague, it seems, on where they actually want to see Venezuela headed in terms of its leadership. Yeah, these geopolitical events are something that, unfortunately, we've becoming to have to get used to as investors. You know, the market reaction was largely to pass through it and focus on what markets truly care about, and that's global economic growth. And there were some nice results over the past number of days through the purchasing manager indices that showed an uptick in the manufacturing space, a little bit weak on the one survey in the U.S. on the ISM. And so the capital markets are taking a pass, I would say, really on the
sideshow that is Venezuela and Trump.
You say that it was surprising how resilient economies and stocks were last year when you think about threats such as tariffs, but you see some big T's towards the end of the year, turnaround terrific and all-time highs. The market sure rejoiced towards the end of 2025.
Absolutely. We characterized last year with two words: resilience and feedback. And the resilience was certainly the way that consumers continued to power through globally, despite the fog and certainly the disruption and the rewiring of global trade, but also businesses. A lot of it, yes, is the artificial intelligence capital expenditure story that has driven the market last year. But we're anticipating and looking forward to a broadening out for the global economy. And that's something like, you'd see yesterday with oil prices moving higher. That is a sign that we're expecting, an uptick in global growth.
So the projection for the global economy growth of more than 3.2% for this year?
Yeah, anything above 3 has been a decent number over the past decade. And so it's always about expectations versus surprises. And we know the U.S. economy has been running very hot and continued to run above expectations last year. But the Canadian economy came out surprisingly strong with the back half of the year last year, improvement in the Eurozone. Also coupled with, I think, what is a change in attitude, forced in large part by some of the geopolitics, with this fiscal spending push that we're going to be seeing in Europe, in Canada, nation-building projects, defense spending, and the Chinese are continuing to stimulate their economy as it has been moribund for a number of years, as we know.
What are your thoughts on tech stocks this year, Brent?
Yeah, I think we're going to have to move from just the AI innovator hyperscalers and start to think about the adoption and the spread of this technology across the economy. When you think about general purpose inventions over the centuries, the big, huge rewards obviously go to those who innovate and discover these inventions. And we've seen a lot of that. That would be the NVIDIA example. But the productivity gains have to come with adoption of the new technology across a whole variety of bread and butter, normal, everyday Main Street sectors for the economy. And I think that's going to be the story for technology this year. And that's going to involve more of not just the technology space itself, but a broadening out where we can see productivity gains in other areas like financials and industrials, you name it, really, healthcare.
I wonder, there seems to be evidence that companies in many cases have been slow to realize productivity gains from AI investments. Now, I know it's super early days. We're just at the dawn of this thing. But is there a risk that investors will decide, hey, this is going to take years to play out maybe, and they'll deflate some of these AI-related stocks?
Yeah, I think there is a risk that we've straight line extrapolated some of the opportunity in some of the businesses. That's, again, not unusual for new technologies, new inventions. You do get some sort of over-enthusiasm. That is what drives the reward and the attraction for the technology to be adopted. The interesting thing about productivity, it's a nebulous concept. It's very hard to see it and to measure it in real time. It is often only observed in hindsight. We've seen strong productivity gains in the U.S. economy for a number of years, and that isn't just the AI story. And so I do think there are productivity gains happening in the economy beyond just artificial intelligence, whether that's automation or other adoption of technology that's a little bit more mainstream and has been here for a while.
You're so right. We bandy, I love that word, bandy. We bandy around terms like productivity. And what exactly does that mean? Yeah, I suppose in some ways it's extra work you can get out of each employee. Leave us with a final thought, Brent. I may have asked you this before, and I'm sorry if I have, but do you think there's some risk, some iceberg out there in the mists in 2026 that we should watch out for?
Listen, I think we always have to be on guard for black swan events. If we knew what they were, we wouldn't call them black swan events, right? But when we look at the various fundamentals across the economy, the consumer, debt levels, what businesses are up to, the exciting things that are happening in technology, opportunities for a rewiring of how we do business. One of the things I think that really was proven last year is the business of the world is doing business, and it can adapt and move forward, businesses and households, once it has some understanding of the rules of the road. And I think there'll be less fog if there's an iceberg, hiding out there. We might see it sooner because there'll be less fog from the geopolitics and the trade rewiring. What should investors do, I think, is to make sure that they keep their risk tolerance in check. Mm-hmm. One of the things that can happen after 3 years of very strong markets is we all think we're investing geniuses. Mm-hmm. And we see our risk tolerance creep into an area where we may be uncomfortable if we really truly ask ourselves, what would happen? What would I do? What would my reaction be if the market went down 10 or 15 or 20%? And if the answer is that you're going to panic, then you should probably do some rebalancing in your portfolio. It's referred to as bull market genius. Uh-huh. Everybody's an investing genius when markets are going up. And so check your risk tolerance, take some profits, be disciplined. And I think that's the best way to navigate if there are icebergs hiding out there in the fog.
Brent, thank you very much indeed. Brent,
always a pleasure. Thanks, Andy.
Brent Joyce, Chief Investment Strategist at BMO Private Investment Council and BMO Private Wealth. Coming up, we're going to hear more on why the Prime Minister insists that he's not worried about increased oil production from Venezuela. We'll be right back. Let's get more on the Canadian reaction to the capture by the U.S. of the Venezuelan leader, Nicolas Maduro. We're joined by CTV's Scott Hurst. Scott, thanks very much for joining us. Can you remind us what the Prime Minister is saying about Canadian oil and Venezuela?
Good morning, Andrew. The Prime Minister is in Paris with the main focus on the future of Ukraine, but he did comment, as there is obviously a whole lot of reaction to the ongoing and the significant geopolitical upheaval with this U.S. operation capturing Venezuelan leader Nicolas Maduro. And this morning, Prime Minister Mark Carney commenting on that and obviously the impact it might have on Canada. Prime Minister saying ultimately the removal of what he calls an illegitimate leader is welcome news and creates the possibility of a democratic transition, which is a positive for the people of Venezuela, but also asks on the potential impact or the threat to the Canadian oil industry, with the U.S. president really pushing American oil companies to go into Venezuela and invest in the infrastructure, which could take a whole lot of money and many years to really bring up to speed. But Carney saying ultimately Canada has a competitive product, and arguing his government is pushing to find new markets. Not good enough, as we heard this morning, also with a letter to the Prime Minister on social media from Conservative leader Pierre Poilievre, saying recent events in Venezuela have altered the global energy landscape and is calling on the Liberal government to approve that new Pacific pipeline, which the government has signed a memorandum of understanding with the Premier of Alberta. He's calling on the government to approve that pipeline within 60 days of receiving Alberta's proposal. And so the Prime Minister is saying the product that Canada does produce is competitive, and arguing their government is pushing to create new markets.
Canadians across the country have been voicing their opinions since Maduro's capture. Summarize that if you could, Scott.
Andrew, there has been mixed reactions from Canadians. Of course, there are lots of questions in the international community about the legality of the U.S. operation in Venezuela, as the Trump administration is justifying its actions and potentially hinting at more military operations. Now, specifically when it comes to Venezuelans in Canada, Venezuelans in other parts of the country, country or Venezuelans still in that country. There is somewhat cautious optimism, as I mentioned, as the world debates the legality of the strike, and many are condemning the U.S. operation in Venezuela. And we heard yesterday Nicolas Maduro himself in a New York City courtroom claiming he is innocent and still the leader of that country. But for many who've suffered, Andrew, under his brutal regime, this is seen as a positive step. So there is hope potentially for the future of the country, for the people of Venezuela, expressing some cautious optimism today.
Thank you very much indeed, Scott.
Thanks, Andrew.
Scott Hurst of CTV News. Prices of oil were up yesterday on speculation that the capture of the Venezuelan leader will disrupt supplies from Venezuela. But we did see some selling in Canadian energy names. CTV's Rachel Aiello has more in this report.
As the market absorbed the potential implications of U.S. President Donald Trump tapping Venezuelan reserves.
I think everybody needs to take a deep breath. There are so many steps between here and them starting to grow production enough to really start to compete with Canadian oil.
After ex-leader Nicolas Maduro's weekend capture, Trump sent shockwaves around the globe, musing about more military invasions.
It's by no means all about the oil. It's about someone defying an American president. That's a pretty powerful example for those who are left.
Canada is no stranger to Trump's annexation threats, but the president's former national security advisor says he doesn't think this country is at risk.
I think any kind of move against Greenland or even more far-fetched against Canada would be the end of the NATO alliance. It would do incalculable damage, not just to the United States, but to the entire Western world.
Prime Minister Mark Carney's response so far has been careful, and critics say Trump's actions are exactly why Canada increasing its economic, military, and diplomatic independence is essential.
Internally, I think this boosts the obligation for Canada to get very serious, for Parliament to get very serious about diversifying our trade exports beyond the irrational administration of the United States.
Carney spoke to Venezuelan opposition leader Maria Corina Machado on Sunday, pledging Canada's support for a peaceful, negotiated, and Venezuelan-led transition process. And Venezuelans in Canada expressed cautious optimism today.
We're pretty happy of what transpired.
The biggest happiness to the biggest worries.
I think it's time for Venezuelans to be happy again.
Global Affairs is urging Canadians to avoid all travel to Venezuela, citing the unstable political situation and escalating security risks.
We're just a few minutes away from the start of trading. We'll check out some stocks that are of interest in the pre-market. We're counting down to the open in North America on this Tuesday. Let's check out, though, how markets around the world have been doing. First off, here's how major Asian bourses finished the day. Japan's Nikkei at an all-time high, boosted by banks, brokers, and industrials. And you can see quite the rally in Asian stocks today. Let's move over to Europe. German DAX is near its record high. The FTSE in Britain above 10,000. You can see we did earlier see some selling in Paris. There was softer than expected inflation data, but you can see subsequently Paris or French stocks held their own. And let's have a look at U.S. futures as we count down to the open. It looks like we are going to get a pretty lackluster open today, not really down very much or up very much. Yesterday, U.S. stocks closing at 6,902, still down from the record high close of the S&P 500 on Christmas Eve of 6,932. So the market in the U.S. is still about 30 points down from the record high on December 24th. Let's have a look at how the TSX traded yesterday after its gangbusters year last year, in which it outpaced the U.S. market. You can see in the past 12 months, our market up almost 30%, excluding dividends. And in fact, Canadian stocks closed at a new record yesterday at 32,000 219. So it's been a pretty good year for Canadian investors. A few stocks of interest. Let's start off with a name called Zeta Global. It has teamed up with OpenAI to use OpenAI's technology to power its marketing agent. This is a marketing technology company, and it'll use OpenAI's models to power its agent, which is called Athena. The company likes to call itself a, quote, AI-powered marketing cloud, and it plans to offer the agent to all customers by the end of the first quarter. And we know that AI is important for improving visual systems, automatic visual systems. An awful lot of the human brain's computing power is tied up with vision. A company called AIVA has been jumping as well. They have teamed up with NVIDIA. There's a lot of jargon in this one, but it essentially involves AIVA's LiDAR technology is going to be used for NVIDIA's Hyperion autonomous vehicle reference platform. And AIVA stock has more than doubled over the past 12 months. It's kind of it's incredible how we just shrug off the achievement of AI and actually being able to look at the environment like a crowded street and let's hope navigate vehicles or drive vehicles safely. Let's have a look at Precision Drilling here. Precision does expect to book some charges, a total of about $84 million US in non-cash items in the fourth quarter, as it decommissions rigs and shortens the lives, or the assigned lives, of drill pipe assets. The company did say, though, that its operating results are tracking prior guidance. And we have UBS raising its price target on Aritzia to $150 from $118. And sticking with a buy rating, the company is looking for, quote, a solid third quarter report from this clothing retailer. Aritzia is set to report its results after the market closes on Thursday, January 8th. And UBS says, quote, our analyses indicate that Aritzia maintained robust momentum in Q3, and this strength has continued into Q4. Look at that stock. It has been a double in the past year. Incredible that they are apparently going great guns in the United States. Well, not incredible, but impressive how they are growing so rapidly south of the border. And finally, Wolf Research downgrading Shopify from outperform to peer perform. And there's a look at how Shopify performed on Monday. Up next, we got those opening bells. There's the opening bell action. At the Nasdaq, Hellas Pharma is ringing the bell. At the NYSE, Tortoise Capital is doing the honors. It's time for the first 50. And here we have it, the opening of trading in North America. Thank you very much for tuning in to BNN Bloomberg today. Remember, the TSX got to a record high close yesterday, and it's pushing further into record territory this morning. There is our index up, excluding dividends, up almost 30% in the past 12 months. And if we can stay on course at this, we're set for a new record high. And there's the S&P 500 I mentioned before the break. It hit a record on Christmas Eve, December 24th. And we're still slightly down from that, but pretty darn close to a record for the S&P 500. And there's the NASDAQ, still below 23,500. And its record was almost 24,000. And that was back at the end of October. So the NASDAQ still down from its record high. Some stocks of interest here. Let's see how Suncor is doing. You can see investors bidding up that company. The company proclaiming its latest results, saying that we had a record-breaking year, 2025. We delivered Investor Day commitments 1 year early. This is interesting. The company says it had the safest year in its history for both personnel and process safety, because, of course, that has been a concern over the past few years, worker safety at Suncor. And so investors, marginally pleased with what they heard there, it seems. Precision Drilling talking about charges north of $80 million US, partly because it's shortening the assigned life to some assets. Investors don't seem concerned there. Okay, let's keep it. Oh, one stock. Sorry, I want to have a quick look on the Venezuela front. Gold reserve. I wonder will we see a few of these stories, but certainly gold reserve. They, according to Bloomberg, have been battling to get back confiscated Venezuelan assets, and the company, according to Jacob Lawrence of Bloomberg, sees a path to get back control of 2 gold deposits that were seized by Venezuela. Now, the stock not doing much of anything today, but yesterday it surged to north of 450 from less than 250 on Friday. So that is a stock that investors think could be a winner here if there is a change in Venezuelan policy. Let's get over to Jeff Morgan, Deputy Team Leader for the Bloomberg News Equities team. Jeff, great to see you. He's got some U.S. movers. Thanks very much for joining us. What's going on with Vistra?
Yeah, good morning. Vistra is one of the top performing stocks in the S&P 500 today, and definitely worth watching. Up as much as 6.6% when it came out with the news that it was going to buy a fleet of natural gas-fired power plants from a company controlled by Quantum Capital Group. This is the company kind of trying to deepen its bet into powering the AI and data center kind of build out. So these natural gas power plants are in the U.S. Northeast, and they're also in Texas. It's about a $4.7 billion deal U.S., and the stock is moving up this morning on some optimism that Vistra, which is a kind of an independent power producer in the U.S., which is already providing power to this sector, is kind of expanding its capacity in that area. Vistra, I'll just remind everyone, was one of the top performing stocks in the S&P 500 for the full year. I think it was in 2024. This is a stock that has really gained with AI trade and is one of those AI-linked names that has been moving higher.
It's incredible. Yeah, maybe we could put up a one-year chart for Constellation Energy, CEG, if I remember rightly, another big U.S. power producer. Lots of optimism built into that stock too.
That's right. Vistra, Constellation Energy, New Era Energy, those are 3 independent power producers that have really been beneficiaries of this kind of AI build-out trade because all of those data centers are going to require power to operate. And these are some of the companies that have seen some big gains as a result.
I'm just curious, control room, maybe could you put up CCO, Cameco, the uranium stock, because it does seem inevitable we're going to need new nukes if demand for electricity is permanently increased. But fascinating how we haven't seen certainly a rush of new nuclear build announcements in North America. I know Ontario's got an aggressive plan, but there are hopes that, look at that, Cameco up 80% in the past year.
It's been quite remarkable. You're absolutely right. I think maybe a little bit slower in terms of the build out of these things. However, in the U.S., you have seen some of those companies that we just mentioned restarting nuclear power plants that had previously been idled. We talked a couple of years ago about the what was it? The name escapes me right now. 4 Mile Island, I think it was, power plant that's being restarted as well. Again, part of this trade.
Right, the 4 Mile. I think Constellation's involved in that, if I remember.
That's right. Yeah.
And it could be that Microsoft is the customer there. But it's one of the internet giants, I believe, was teaming up to rejuvenate 4 Mile Island. Yeah, it's fascinating that how sentiment appears to be turning, but it's always going to be politically fraught, though, isn't it? Radiation, I know a lot of experts say, you know, the risk is tiny compared to other environmental hazards, but it's always spooky. You can't see it, you can't smell it. Thank you very much, Jeff.
Thank you.
Jeff Morgan. Okay, we are going to be drilling into the US PMI figures next. A lot of observers are looking out for signs of weakness, cracks in the US labor market. We'll be right back. We are awaiting release of PMI numbers at 9:45 a.m. Eastern Time. Our guest in particular is focused on employment details south of the border. This could be a weak link for the U.S. economy. We're joined by Garnet Anderson, Head of Portfolio Management at Tacita Capital. Thanks for joining us, Garnet.
Thank you for having me.
So just remind, what are we due to get at 9:45?
Okay, so what we're seeing today is really the PMI services. So Purchasing Managers Index is basically a survey of purchasing managers, either U.S., Canada, or globally. And they really ask the question, is your activity this month greater or lower than the last month? And so if you get a read above 50, it means business is growing. The higher above 50, the more you get acceleration. And so, for example, if you take a look at Canada, it's got its services coming out. So
at 9:45?
Yes, this morning. And so when you take a look at last month, so November's was reported in December's, basically fell off a cliff, went above 50 to down to about 46.
In Canada?
In Canada.
Sorry, is this services or manufacturing?
This was services in Canada, which was a little bit surprised because services has been holding up for the last little bit, but we saw that come off. We saw some job losses, like news that came out of there. We saw that work backlogs were being chewed through. Now, when you put that over to the global picture, where Canada ranks towards the bottom of the table in terms of our, our activity levels, it's a little bit of a more buoyant picture. And so what you've seen is outputs continue to grow. Backlogs, though, have started to come in a little bit. But to chew into that, there has been some buoyancy recently after a pause in terms of some employments. People are looking forward to 2026 and going, we're thinking 2026 is going to be a calmer year than 2025. And they start to hire up a little bit in November. So it'll be interesting to see if that continues in December.
So just to clarify, at 9:45, drum roll, we're going to get numbers on the Canadian services.
And global services.
Okay, but not U.S. manufacturing.
Correct.
I got that mixed up, and I'm sorry about that.
Oh, no, okay.
Okay, and just to turn to the U.S. economy briefly, U.S. employment is on your radar here.
It is. Well, first of all, there was the shutdown, which messed up the numbers. And so we're a little bit of a catch-up, trying to get a trend. I think every time somebody looks at, the continuing claims or the new jobless claims and whatever, and you look at a single point in time, it doesn't tell much of a story. It's easy to get alarmist about that. You're really looking for trends. So that pause in U.S. data hurt some of that trend watching. So what we're seeing now is when new numbers come out, that's going to help us, see what that picture is. So the PMI numbers are a month-by-month read on that. They see through it because it's, again, surveys of actual businesses. And so stateside, you're seeing a little bit improvement in the employment picture, not to where it was. Whereas in Canada, we're seeing it head a little bit the other way.
You have some stock ideas for us. Start off with American Tower. They are obviously an infrastructure player.
Well, they are, and they are a little bit of a nice diversified plane for some of you who has got a good Canadian portfolio of REITs and infrastructure stocks. We don't really have a single purpose tower REIT or company here in Canada, and they are a world leader. I mean, the major world leader is over in China, just thousands, but they are the world leader on the independent front. They basically have cell towers, which when you think of cell data usage, it just continues to go up and up. We went from 3G to 4G to 5G. That increases usage. Then you think of all the wearables, from watches to eyeglasses and what have you. That drives it up. As we move more towards robotics, well, those movements are all drive data. Cars, to your earlier point.
Yeah.
When we get there one day, well, that's going to drive a lot of data. And so what American Towers has done is they've got the cell towers, and they move from 4 or 5. They're getting ready to move to 6G. That's still a couple of years out. But they also went in 2021 and bought really kind of a data center business. It's not a hyperscaler. It will link in with the hyperscalers. But if you are operating a robot, for example, you can't necessarily have your data centers making decisions out in Seattle if you're in New York or up in North Bay or what have you, right? So there's a tendency to have those intermediate players closer to where the activity is. And they have 150,000 towers, lots of real estate where they can be.
150,000, yeah.
Oh, it's massive. Well, if you think of on top of all the buildings and the unique sites and whatever, there's a lot. So as they're able to move these little modular data centers closer to their towers and utilize their real estate better, they're going to get operating efficiencies. So that's been a higher area of growth. The actual cell towers growth has kind of calmed down a little bit. They had some upset. They sold their business in India. Some of the large U.S., because they were really carrier agnostic, but some of the carriers stateside have pulled back a little bit on their sheer growth and popping out new towers. But long term, the data use is going to be there. So we're constructive on the stock. It's a nice, again, diversifier in a portfolio kind of counterbalances some of the Canadian.
Speaking of wearables, I did just get a smartwatch.
It's a good-looking smartwatch.
Nothing very fancy, but it's already informed me that I'm overweight. And it's been telling me, get off the couch, walk around a bit.
It is just after the holidays. That's a fair call.
Yeah, that's incredible. It's actually incredible, the amount of technology in there. We're tight for time. Aritzia, we're getting their numbers this week. You see upside.
Well, we see upside. I mean, it's really a 6-cylinder car driving a 7-cylinder. They're doing pretty well everything right, from fashion to inventory to their margins to their step out of their U.S. stores to step out of their mobile app. It certainly is a good stock. It's a good company, and it's a good stock. It's got reasonable upside. Analysts are all over this and pushing it higher. Just a word of measurement, if you will, sort of thing. It still is a fashion story, and they happen in the right place. But we could just as well have been talking about Lululemon 4 years ago. Right. Everybody's well aware of fashion can come and go. They seem to be executing very, very well. But it does speak to not having in your portfolio. We've got it in our portfolio from a momentum perspective. It's just a matter of needing to keep your eyes on it. You can't kind of just buy it and park it for 10 years. But again, management's doing a fantastic job. Expectations for their earnings coming up after Thursday's close are expected to surprise again on the upside, which if happens like last time, you'll see a nice little pop in the stock.
Thanks very much, Garnet. Garnet Anderson of Tacita Capital. Yesterday on Market Call, we were joined by the one and only Rick Rule, President and CEO of Rule Investment Media. Of course, natural resources were the focus. His top ideas were B2 Gold, Amerigo Resources, and SLB, once known as Schlumberger. Today, it's Matt Kacher, President of FSA Valuation Services. His focus, North American equities. Up next, some employers, including the Ontario government, want workers back in the office 5 days a week. Not everyone's delighted. We'll be back after this. Ontario government employees are now required to work in the office 5 days a week, and that has sparked pushback from workers. CTV's John Venavalu Rao filed this report.
Work-life balance. With a simple message, these Ontario government workers held a lunchtime protest to show just how they feel about the full-time return to the office.
Frustrated because we were doing well working from home.
These workers had been allowed to do their job from home 2 days a week. But among the tens of thousands of Ontario public service workers now required to be in the office 5 days a week as of today.
It is frustrating. It is frustrating, yes.
Some complaining there's not enough office space to accommodate all of the workers being back full-time. But the Premier says it's all being worked on and will get sorted out.
It's great to get everyone back to work like every other normal citizen. You know, you go out there and you show up 5 days a week.
Ontario's civil servants aren't the only group to see an end to most hybrid work. Alberta's public service is returning to full-time in the office in February, as will Rogers Communications, while many of the country's major banks are already back at the office 4 days a week. Employers argue fewer days at home boosts productivity and leads to better collaboration. But critics disagree and say it leads to, among other things, more traffic congestion.
There's a lot of resistance, and what we also see is that some of the best performers are likely to walk out and leave their jobs by being forced back into the office.
Most federal government workers are required to be in the office at least 3 days a week, but Prime Minister Carney has said return to office rules are being looked at, with more details to come. As for commercial real estate firms, they're continuing to see a boost in demand for office space in cities like Montreal, Toronto, and Vancouver as more workers return to the office full-time. John Benavalli-Rao, CTV News, Mississauga.
Okay, yep, that's interesting. Some of the best performers may decide, I can do better elsewhere, or they'll let me work at home. Coming up, emerging markets were among the top performers in 2025. But there are questions. Will they do as well in 2026? That's ahead. Okay, emerging markets thrived last year. We heard from Hadisa Jatow, VP and Portfolio Manager at Mackenzie Investments, and discussed the main drivers for that strong performance.
U.S. dollar weakness. Fed also delivered a couple of cuts that really led EM assets across the board to outperform. If you look at EM local rates, for instance, performance ranges to anything between 15 to 25% when you account for FX appreciation, but also rates coming down as central banks, especially in LATAM, continue to deliver rate cuts. I do believe that we can see that rally really further extend into 2026 because many of these drivers are still well alive. We expect the US dollar also to weaken in 2026, while Fed might not necessarily cut as much as the market is pricing today. Even a stable policy rate in the US is still good for EM. And I would say the one of the key drivers that have changed over the past 48 hours is going to be obviously US geopolitics. The Venezuelan intervention that we've seen is, in my view, a strong signal in terms of engagement of the US within LATAM country in particular, given how much the US are willing to have supply chain access, focusing on resources, focusing on access to energy, and those countries obviously will play a key role in that objective.
I was going to say, is that a good thing or a bad thing for some of these markets?
I think it's a very good thing. I think from two perspectives. First one, obviously, is the economic growth that is going to be lifted if we see more resources being tapped into these countries. But also think about a country like Argentina, where the U.S. earlier last year came in and started buying Argentinian peso on the market, offering a clear backstop and really reducing the tail risk that was embedded with Argentina. As we know, Argentina is a country with a ton of resources, had everything to succeed, was in the 1900 amongst the top 10 richest country in the world, but now is almost at the brink of bankruptcy. All that because political regime instability led to poorly run country while resources were all there. And now with the US backstop, markets are now coming back and reconsidering investing on the longer term in these countries. And I think this is obviously a strategic change. It's a significant shift, and that would see more and more FDI and more assets going into EM countries in general, but I think in particular LATAM is well placed.
So Hadisa, when you're looking at an emerging market and their growth prospects, what do you take into account?
You have to take account a few things. The first one, obviously, is exports, how much of this country are able to export. And I will really put them in two categories. You have what I would call the one-trick pony country. Let's take Nigeria as an example with oil. All they do is exporting oil, but that oil is not necessarily supporting growth organically within the country. If you take Argentina or Brazil, typically those countries are somewhat closer to what we'll see, let's say, in Canada in terms of the structure of the economy and the ingredients that are needed, not only to support growth from a resource perspective, but also having a highly educated population that helped increase productivity in the country so that we create sustainable growth rather than exporting just some high-value resources externally, but then the level of development in the country is really stalled and not necessarily moving the needle, despite the capital that are coming into the country from the resource perspective.
Okay, your top picks for 2026, one of them is Argentina, and you stated sort of what you see there as far as strength goes. What about Brazil?
I was in Brazil and Argentina back in November, spent 2 weeks there, met with officials, central banks, governor, and also investors in place. I would say my top pick are Brazil, obviously. Brazil is one of the highest yielder in the world. If you look at rates, you can be paid 15% all in or 9% after inflation, which is really a very, very significant carry. I do believe that the upcoming elections with Lula somewhat being questioned and see maybe the pendulum swing toward the right, we'll see capital inflows. What we've seen so far in EM is more, let's say, fast money, and that's exactly what we saw in 2025. Hedge funds, maybe short-term investor, but actually long-term investor, long-term allocator are not still in the pace, and we can see that it is still underinvested. And I believe that given how much stocks have done well in 2025, some of the excesses we saw, especially in US stocks, tech stocks, AI, that concentration could lead some of the long-term investor to reinvest towards diversification, and that would mean really some form of a tailwind also for EM.
Okay. Sorry to interrupt you. I do want to get an idea of markets you think investors should stay away from.
Market we should stay away from, I would say, as it stands, would be Eastern Europe. I do think that Eastern Europe, in terms of valuation, doesn't necessarily offer as much, and given the proximity, obviously, with Ukraine and all the changes in going into Europe, I wouldn't necessarily be positive on Eastern Europe, but definitely on LATAM, Argentina, and also Brazil.
Coming up, we're going to get an outlook for Canadian oil in 2026. We're going to hear from Rebecca Telcher of New Haven Asset Management. Welcome to the second hour of The Open. Let's check out some of the big stories we're bringing you from our newsroom. Okay, we mentioned this earlier. A company, a TSX, is a company called Gold Reserve. So its stock jumped yesterday. It says it's seeking to regain control of its assets after the change in Venezuela. This company operated gold and copper assets which were seized by the country's government. In an interview with Bloomberg News, Gold Reserve said it's already exploring deals that could help develop the deposits under a new Venezuelan government. One of the deposits is said to be worth more than $40 billion US. The Prime Minister says Canada is working to expand oil markets in Asia. Talking to reporters in Paris, Carney says he said he sees Canadian oil as being a low risk compared to Venezuelan crude, and says that will help it remain competitive. In a social media post, the Conservative leader, Pierre Poilievre, urged the Liberals to immediately approve a pipeline to the Pacific coast on the possibility of an end to U.S. sanctions on Venezuelan oil. Suncor says it has achieved its production targets 1 year earlier than planned. The Calgary-based energy giant says this was driven by record production in the fourth quarter of last year. It also says it was helped by record results in production, refining, and utilization. Suncor will provide more details when it releases earnings in early February. And here is a look at the TSX trading in record territory once again. Boosted, well, we did see a weakness in Canadian energy names today, but the market has, or yesterday, but the market has been hitting new record highs. I'm just looking at the big traders right now in Toronto. And Suncor, as we mentioned, saying it's achieving targets earlier. That stock up around $1 right now. Just looking at some of the other big energy players. Yes, Cenovus's energy is edging higher as well. And let's have a quick look at the U.S. markets. The S&P 500 not far off its own record highs. Maybe we could have a quick look at CAE. CAE, the big supplier of aircraft training simulators, thanks to control room. That stock hitting a record high in trading today. The company has just sold its first flight simulator to Joby Aviation, which is the electric aircraft company. And it also has won a contract with the Australian Air Force. That contract, well, we heard about that in mid-December, worth more than $250 million. Selling simulator technology to the Royal Australian Air Force. Let's have a look at oil, see how it's faring amid speculation over the effect of America's seizure of Venezuela's leader, the effect on the global oil market. And now oil was earlier near a one-week high, but under pressure right now. It looks like those glut fears are not going away. And let's have a look at gold to see how it's faring. What a run gold has had. You can see it is edging up around 1% right now. I don't think it's back at record highs, but having said that, let me check. Yeah, that future sub 4,500, and Boxing Day, we did see futures hitting more than 4,500. So gold only just down from its record highs. Markets still trying to make sense of the situation in Venezuela. U.S. President Donald Trump has said that America plans to take control of Venezuela's oil industry and ask American companies to revitalize it. Now, we did see some pressure on Canadian oil stocks yesterday amid speculation that there'll be more Venezuelan heavy oil coming on the global market, competing with ours. Let's get more from Rebecca Telch, our portfolio manager at New Haven Asset Management. Rebecca, always great to see you. Happy New Year. I hope I'm not too late.
Happy New Year.
Thanks. We also are hearing, of course, that it's going to take years to significantly revive Venezuela's oil production.
Yeah, it was interesting to see the market's reaction yesterday to the Canadian oil stocks. Am I concerned about U.S. oil production? I mean, maybe in the medium to long term. In the short term, absolutely not. And in the meantime, there's a lot of, like Carney said, we could build more export pipelines if that ever gets done. But there's a lot more questions than answers right now as it relates to what's going to happen with the Venezuelan oil production. As you mentioned, it's going to take years, and estimates from tens of billions of dollars to hundreds of billions of dollars to be able to bring Venezuelan oil up to 3 million barrels a day. So lots of questions, lots of uncertainties, and if there is going to be a displacement in oil, this is a medium to long-term situation. What I find interesting is that the market, while it was reacting really sharply to what's a potential medium to long-term risk, was completely ignoring some short-term, risks. What are we experiencing now? Geopolitical concerns that are higher than they've ever been, a slowing economy, a slowing housing market, an overvalued stock market, and the stock market in the U.S. and Canada are continuing to make record highs, largely ignoring, what I think are larger concerns than what we're seeing in the oil market.
So I'm trying to get, just sticking with the oil market. So the stock market is doing just fine. But the oil market is, it's interesting, isn't it? Stocks hitting record highs, but oil down sharply.
Yeah, so, oil was down prior to, the announcement of Venezuela. There is, talk about, OPEC, they're going to be producing more, so there is a supply glut. Also, we've been saying this for a long time, that the economy is slowing. There is a potential risk of a recession. And in general, the demand for oil goes down in these periods of time. So that's not surprising at all. Actually, what we found commendable is how well our Canadian oil producers held up in such a weakening environment. We've said it for a long time, like CNQ is our favorite oil producer because they are the low-cost producer and they own premium assets, so they're going to be able to thrive in a low oil price environment. Relative to, let's just say, some of the U.S. light oil shale plays, where if we see prolonged periods of sub $50 oil, what's going to happen to the production in the U.S. Whereas I'm not concerned about Canadian oil production, even if we see prolonged periods of weaker oil prices.
One stock you like the look of is Enbridge. It saw some selling yesterday, but you see long-term value here.
Yeah, so those are the two stocks that were down the most in our portfolio yesterday was CNQ and Enbridge. And again, just seeing how much they fell yesterday reinforces our view that these were not fundamental traders that were selling the stock yesterday. It was probably fast money, hedge funds, algorithms, or quants that were trading it, because anyone who looked at the fundamentals, I don't think would have sold. So you look at Enbridge, it was down 3% yesterday. It still yields 6% and growing. Their main line is full. The only asset that would be at risk is, they did announce that they're going to expand their main line. So, maybe they're not going to do that. But, that was a $1 billion project and a $20+ billion project of CapEx program. Most of their growth is actually in gas distribution, which is very utility-like. So, I think, again, in the short to medium term, their main line remains full. I don't think there's a question about, a displacement of Canadian oil in the short term. Why the stock was down 3%. News to me, again, not a fundamental trade. CNQ, same thing, the stock opened down 8%. I think it closed down 6%. But if you look at the actual makeup of what they're producing, about 15% of their oil is actually that conventional heavy oil that would compete with Venezuelan oil. Their production is about 40% natural gas, which is often discounted, but that is a big bulk of their production. And their oil sand production, a lot of it is actually upgraded. So it's upgraded light oil or synthetic crude, which is actually trades at a premium and doesn't necessarily compete with Venezuelan oil, so it wouldn't displace that oil. So again, two stocks that we own, we continue to own. We saw weakness yesterday. We're seeing some continued weakness today. Again, we don't think that's a fundamental long-term issue with the companies that we own. We just think this is quick money coming out, and this could be an opportunity to buy more. We're kind of waiting and seeing right now how this plays out, but the market is, I think, looking for something to trade, and it just seems to be that Canadian oil is getting the brunt of the selling in the past few days.
Rebecca, thank you very much indeed.
Thank you so much.
Rebecca Telcher, Portfolio Manager at New Haven Asset Management. Coming up, we are going to increase our focus on Canada's energy sector in the wake of the capture of Maduro. We'll talk to Patrick O'Rourke of ATB. Things in a state of flux in Venezuela, but apparently the White House wants the U.S. to take control of Venezuela's oil industry and get American companies to revitalize it. Let's get perspective on what this could mean for our energy sector. We're joined by Patrick O'Rourke, Managing Director at ATB Capital Markets. Patrick, thanks for joining us. I know it's an impossible question at this early stage, but what are your thoughts? Is there going to be an impact on our energy sector in the near term at all?
It is early. I would say that, yes, it's very likely that there's going to be an impact, but we have to kind of understand what that impact will be. So first of all, and I think this has probably been highlighted many times over the last few days, the vast majority of our heavy oil is processed in the Midwest. That's exported to the U.S. And most of that cannot be replaced by Venezuelan oil. The oil production that is at risk today is the oil that we ship to the Gulf Coast. And those barrels can be replaced. The Venezuelan crude is very complementary. Today, they export about, call it somewhere in the neighborhood of 600,000 barrels a day to China. That's very similar to the volume we send to the Gulf Coast. If those are redirected in there, that could put a little bit of pressure on the prices that producers receive in that particular market. Now, those barrels, if they come out of the market, the net demand globally for heavy oil doesn't change. And so that gives us an opportunity to maybe move some more barrels and get some better pricing on mechanisms like TMX. But I think it also opens up a broader question. We recently had the MOU that was signed between the Alberta government and the federal government. And it probably puts a little bit more impetus on actually executing on something like that in the medium and longer term. And then if you look at Venezuela itself, if you think about the longer term production growth capabilities, I think there's a lot of question marks that still remain around reserve quality, infrastructure quality, capital that's going to need to be invested, the regulatory regime that's going to be in place. Significant capital needs to go in there. I think that, large super majors are going to want, a pretty clear line of sight on the political regime change and what that means before they're willing to make those commitments. So I don't think it's going to be an immediate production growth to compete with our barrels, but there are some risks, certainly, and we're watching those very, very closely.
You have an interesting point here that we saw lots of takeover speculation in Canada, oil takeovers. We saw some deals, the biggest was Cenovus buying Meg Energy. You think a lot of the prizes, the juiciest companies may already have been taken out?
Well, if you look at the different asset classes in Canada, the oil sands have gone through significant consolidation. We've seen that over the last several years. You spoke to Cenovus and Meg there. There's very few sort of pure play, scalable brownfield or greenfield oil sands assets that are probably ripe for consolidation. One we've talked a lot about is a company like Athabasca, but I think organically that business stands on its own. And then in the Montney, particularly in the condensate-rich fairway, we've seen a significant amount of consolidation over the last 3 years. And so our M&A thesis in 2026 really revolves around finding assets that are very deep in high-quality inventory, not necessarily very short-term free cash flow accretion, but solidifying the inventory perspective. And that's, to be frank, that's been a bit of a headwind in the U.S. for some of those producers as they've seen the quality of the tiering of the future locations sort of degrade as they've harvested their best locations first. And that's where we see the opportunity in Canada to remain as, a high-depth inventory, high-quality assets are most in favor, in our view.
Just to zero in on a couple of stocks, Suncor is an oil sands giant that you're less keen on. I mean, the stock's had an amazing run. Why is that? You have a hold, I believe, on Suncor at your shop.
Yeah, we've got a sector perform on the stock. I think, it's probably outperformed our expectations. So good on them. They've done an excellent job. They had a great operations update yesterday evening, record production, record throughput in the downstream business. So obviously from an operational perspective, they're firing on all cylinders. They've met their, sort of multi-year strategic plan a year ahead of the time frame here. The next key will be they're going to do an investor day on March 31st and sort of laying out the path forward here in terms of replacing what's, sort of a well-known issue in terms of base mine reserve life. I think that, it's fairly clear that they have those assets that they can do that with. But, the capital outlay and the strategic way that they do that is a question mark for investors. So, I would say if you look at it, and we put our outlook out before the news on Venezuela, I would say Suncor is actually somewhat well positioned here, considering the volumes of upgraded crude that they produce and then the insulation they have through their downstream business.
As a co-owner of the Trans Mountain Pipeline, because I'm a taxpayer, I'm actually thinking of going down to one of the valve houses and keeping an eye on them and giving them some tips. I'm sure they'd appreciate it. But in any case, Trans Mountain Pipeline tolls have been something of a sore point. There's been an effort by the oil patch to bring them down. And you say that if that happens, Cenovus could be a big winner here, and Canadian Natural too.
Yeah, Cenovus and Canadian Natural are both two of the largest shippers on that particular pipe. There is a negotiated toll process that's going on now. We should have some sort of view of how that's going to look by early February. So we're watching that very closely. But any sort of change to the tolling structure there, if tolls do come down, I would say that those two producers are the biggest beneficiaries. And, then there's a knock-on effect to WCS at Hardisty, which is the in-basin pricing. And Cenovus would be well positioned to capture any improvement there.
Patrick, thank you very much indeed, and have a great new year.
Thank you.
Patrick O'Rourke, Managing Director at ATB Capital Markets. Coming up, today's ETF report. Some speculators in Venezuelan debt have done very well, and a little-known emerging markets bond ETF has been thriving. We'll have more after the break on the ETF report. The U.S. raid that captured Venezuelan President Nicolas Maduro has increased the focus on Venezuela's debt. And one player in this area is the Virtus Stone Harbor Emerging Markets High Yield Bond ETF. Now, VEMY. It has been doing well. It's not a very big ETF, and it has only about 2% of the portfolio in Venezuelan debt. However, it's up 50% since its launch. Let's get more from Bloomberg Senior ETF analyst, Eric Balchunas. Thank you very much, Eric, for joining us.
Sure, great to be here.
Tell us a bit about this ETF. You're reporting notes. It's not big, only about $16 million US.
Yeah, there's 4,800 ETFs, so sometimes you just don't know all of them. And to be honest with you, we were booking a show yesterday and we wanted someone on Venezuela. I did a search, which ETFs own Venezuela. There's only 4, and they're all bond funds. And one of them is active and one of them had really good returns. And that's this one. So I honestly hadn't ever heard of it. That's how many there are. I missed some, but I looked at it and I was like, wow, this fund is really aggressive. It's got Venezuela, Lebanon, Egypt, Sri Lanka, Nigeria, a lot of frontier countries. And it's beating what I would consider the benchmark, which is the iShares Emerging Markets High Yield ETF, which is a passive one. So it's beating that one. And I was like, wow, what a hidden gem, because at 16 million, people aren't noticing it. So anyway, we had the manager on to talk about it, and he was really excited. He bought the bonds from Venezuela a year ago. And basically, it's like bargain shopping. These are like left for dead, frontier market bonds. You're hoping for something like this to happen. And these bonds are now up over 150% since they bought them, including 30% on Monday alone.
Right. So they had been rallying already, these Venezuelan bonds.
Yes, they had been rallying already. It's interesting. The market is really good at sniffing things out. Like, I don't know if it sensed something was going to happen, but clearly there was some rallying in the bonds before. But the 30% on Monday was also there. So it wasn't a totally like buying the rumor. But yeah, maybe some people had I think there was some degree of pressure mounting on the country. So if you're like a local EM investor, you're probably well aware of every little bit of news on this, whereas the general public was probably a little more shocked. But yeah, I looked at their portfolio, and Venezuela is the 3rd best performing country of all of the countries they own, which is about 24.
We often have portfolio managers on active managers, and they say, you know, I think this is a good time for active management, as if they anyway, you know. But you guys, I think, argue that perhaps in emerging market bonds there is a case here as opposed to just buying the index.
Yeah, no, it's always the year for active. It's always the stock pickers year. The reason it's hard for stock pickers, besides the fees, is everybody knows everything, especially in U.S. stocks. Like, there's 50 analysts covering Amazon. What possibly edge could you possibly have? But in emerging market and frontier debt, there's a lot more opaqueness. There's a lot more room for like knowing the local market. This particular manager knows some of the people in the government. I mean, so this is where I think active has a real edge, and this performance of this fund shows it.
Fascinating stuff. And of course, that is the beauty of ETFs. They let you play obscure assets that would be just a nightmare to buy from your own kitchen table over the phone.
Yeah, absolutely. I mean, ETFs are like hitting the easy button. They have created what I call an investor utopia. You could just basically roll out of bed, open your phone up, and basically buy anything in the world in 1 or 2 seconds for a pretty low fee.
Eric, thank you very much. Great story. Really appreciate it. Eric Balchunas is a senior ETF analyst at Bloomberg. Coming up, Denmark says a U.S. seizure of Greenland would mean the end of NATO. More on that next. Alberta Premier Danielle Smith is pushing for a new Canadian pipeline after the forced change in leadership in Venezuela. Smith says that development highlights the urgency of the project. That proposed pipeline would be capable of carrying about 1 million barrels a day to British Columbia, where it would be loaded onto tankers for sale in markets, including growing Asian nations. Copper extending a powerful rally after topping $13,000 US for the first time. That's per ton in London. We just showed you the New York price in pounds. There are expectations that the Trump administration will introduce a fresh tariff on copper going after refined metal, and that has helped to draw huge volumes of inventory into the US, and it has potentially left the rest of the world short of the metal as miners struggle to boost output. Copper's role in high-growth sectors such as renewable energy and AI infrastructure has also fueled demand. Shares in Suncor higher today. The energy giant says it has achieved its production targets 1 year earlier than planned. Calgary-based company says this was driven by record production in the fourth quarter of last year. Suncor is holding its annual Investor Day today. And there is a look at the markets. The TSX hitting yet another record high. We saw Barrick Mining hitting a record high. That was one of the high-profile stocks. Also saw CAE. They have sold a simulator to Joby Aviation. The electric aircraft crowd just took a delivery of a simulator from CAE. And of course, as the world spends or wastes more money on weaponry, it does look good for CAE's business. The Danish Prime Minister says that if Donald Trump were to attack or invade the Danish island of Greenland, it would mean the end of the NATO alliance. Let's take you to Copenhagen. Bloomberg's Sarah Sholin is standing by. Thank you very much indeed, Sarah, for joining us. Of course, Mr. Trump has been eyeing Greenland for quite a while, and now this unilateral decapitation, as Bloomberg puts it, of the Venezuelan leadership has raised fresh concerns.
Exactly. So we've been used to Trump's interest in Greenland for a year now. But what seems different this time is that with Venezuela, he really showed what he's capable of. He rekindled the idea of the Monroe Doctrine, and that's basically controlling most of the Western Hemisphere. And if you look at a map, Greenland fits quite nicely into that map. So I think people over here are taking him a bit more seriously now. And there is a sense among the officials that they're really concerned. They're alarmed now in a way that we probably haven't seen them before.
And the Prime Minister of Denmark saying this is a threat to NATO itself.
Exactly. So Greenland is part of NATO because it's part of the Kingdom of Denmark. And if what's going to happen to NATO if one member starts attacking another? As our Prime Minister Mette Frederiksen says, this really shows that the institution will be powerless. You can't really have an international law that's governed by trust, and then if that trust is broken, what are you left with? So this is not just something that's interesting for Denmark or for Greenland. The stakes are quite high for a lot of countries internationally. And we've seen that today, like in maybe like a rare strength and show of unity among the European leaders. They really come together and they back Denmark in showing the US they can't take Greenland. They have to respect its borders.
It's interesting. So Greenland has some autonomy within Denmark, but say defense is a Danish responsibility.
Yeah, defense and foreign policy falls within Denmark. Other than that, Greenland is pretty much free to do whatever they like. We gave them, or we didn't give them. They have had self-rule for quite some time now. But some of the big issues, they're still within Denmark and comes to Copenhagen to be addressed. And that's why Greenland is part of Denmark's territory. So whenever we see these threats from Trump, obviously it'll be a matter for the Greenlandic population and the Greenlandic parliament to respond to, but it's also a matter for the Danish government to respond to. That's why we see the Danish Prime Minister really coming out in full force now, rallying the troops in Europe, getting all the European leaders to support her, and then telling Trump basically to back off. This is part of the Kingdom of Denmark. And tonight we're having a meeting with the Danish Foreign Minister, the Danish Defense Minister. They're going to be speaking with the Foreign Policy Committee. And we expect maybe to hear what they're briefing the government about. What are some of the things they have set in motion now? What are the plans they're having right now?
And the Prime Minister of Greenland itself, Jens Frederik Nielsen, saying that's enough. No more fantasies of annexation. So it looks like the Greenland leader is against any idea here as well of the U.S. taking over.
He has been against this ever since he took office in last year when he won the election. There is a sense among the Greenlandic population that they would like independence. They really want to be their own nation. Mm-hmm. But after we've seen this push from Trump last year, it's changed the mindset a little bit that yes, they would like independence, but not at every cost. And maybe it's pushed the idea a little further out into the future. There was a poll last year asking the Greenlandic people, would you want to become a part of the U.S.? And it was 85% that said no. So even if there is an independent push in Greenland, they're not really pushing to become a part of the U.S. I think what's important to understand is that Greenland has also been a part of Denmark for decades, centuries, really. It hasn't been a pretty relationship all the time. There are lots of hurt, lots of anger, but there is a relationship between the two. And it's kind of difficult to untangle and just all of a sudden become American.
What about the feeling among the Danish people as a whole? Is there any sense of whether they find this insulting that Trump would talk about taking over Greenland?
Well, as I said in the beginning, we've been through this before. It all started January last year. So we kind of used to the notion that suddenly he will start saying, I need Greenland, I need it for national security reasons. So we've had a lot of anger. We had a lot of distrust with President Trump. And I think now what we're seeing from the Danes and the Danish politicians, they're just taking it so much more seriously. So we're a little bit beyond going on saying, well, this is ridiculous. I think there's more a little bit a sense of like, maybe not afraid is the right word, but we're hopeless in a way. How can we go against this big nation? We keep telling them to back off through diplomatic channels, through trying to uphold international law, and they're still threatening us. So we do feel a little bit like this little brother in this big international scheme.
It is Pretty incredible, isn't it, when you think about it, all right, America or the American leader saying stuff like this. Sarah, thank you very much indeed for joining us. Sarah Sholin of Bloomberg. Okay, Canadian energy stocks looking to rebound today, and we did see a move up in Suncor and CNQ. They came under pressure yesterday after America's action in Venezuela. Let's get more from our own Lindsay Biscaya. Lindsay.
And as you say, looking to rebound, they got a little bit, not too much to start off the morning, Andy, but hopefully, at least for these Canadian energy stocks, they can see more of a rebound later. You can see, I know we've been talking about today, Prime Minister Mark Carney also trying to kind of dash investors' fears when it comes to Canadian oil, saying he's not worried when it comes to any kind of competition we might see between Venezuelan oil and Canadian oil. But yeah, some of these big energy stocks, they were trading down by about 4% yesterday. Cenovus, for example, fell more than 5% yesterday. That's the lowest it's fallen in 9 months. And we're seeing a bit of a tick up today. You can see almost up by 2% at the moment. And Enbridge, Suncor, Canadian Natural Resources, some other big Canadian energy stocks that we saw fall quite a bit. If we see a 1 week chart, you can see just how much they dropped yesterday morning and then rebounding today. Suncor up almost 2% as well. So there you go. There's a 1 week chart of Enbridge. You can see that drop yesterday morning. It's starting to rebound at this moment, not so much, but hopefully these Canadian energy stocks can get a bit more of a rebound as well. And then the Canadian dollar also took a hit yesterday after this news. So not great news for Canadian stocks, but we'll be watching this week to see if maybe there's a turnaround if investors have a little more confidence in Canadian oil moving forward.
Yeah, the Canadian Cold Lake crude, the discount on that in Oklahoma widening to the weakest, the biggest in more than a year.
It's amazing to see. And really, the thing here is a lot of investors, as I mentioned, are worried because the U.S. talking about kind of taking over operations in Venezuela. Venezuela produces that heavy crude oil. This is very, very similar to what Canada produces, and Canada imports most of that oil into the U.S. to be refined. So if the U.S. has maybe more access to some of that oil that Venezuela has, maybe it doesn't need as much Canadian oil. That's kind of the thought here. We were speaking with one of our analysts, Richard Madden, this morning, and he talked a little bit more about some of those fears that investors have. Here's what he had to say.
That's sort of a knee-jerk trader's response to something that ostensibly and superficially looks bearish from a supply perspective. And I think the fear that traders may have is that there'll be an onslaught of Venezuelan barrels, which, of course, are substantively identical to the heavy grade and slates of crude like bitumen that we produce in Alberta, and accordingly are going to box out or crowd out Canadian barrels from refineries in the Midwest and the Gulf Coast, which have been specifically engineered and optimized to run heavy slates of crude. And obviously, Venezuelan crude would have a shipping cost advantage. It's much, much cheaper to float the barrels by tanker to the Gulf Coast than it is to rail them or truck them down, or pipe them down, I should say, from Alberta.
Thanks, Lindsay. And I guess, sorry, we should mention there was a glitch there. Those charts were showing, I think, yesterday price action for the Canadian oil stocks.
Yeah, you just saw how much they were down, right?
Yeah.
And that was also Brian Madden who was talking there. And it was interesting. What he was saying also is that Venezuelan infrastructure to kind of extract that oil from the ground is incredibly outdated. So you would need to really revamp that. The U.S. would. And some of those numbers he was saying that he was hearing this morning, it would take about $90 to $100 billion to get that infrastructure in Venezuela up and running. And so we heard that from economists yesterday, too, that this is not going to be a quick process by any means to get that infrastructure up and running to extract more Venezuelan oil. So maybe there's a bit of some breathing room, at least, for Canadian energy stocks.
And as far as I know, it's been just an environmental disaster as well, the decay of Venezuela's oil sector.
Exactly. There's going to be a lot to kind of look at and refurbish, I guess, in a way before anything else.
Lindsay, thanks very much indeed. Lindsay Biscaya. Coming up, we got some hot picks in luxury stocks, including a Swiss company with assets in prestigious jewelry brands, including Cartier. Let's get to some hot picks in luxury stocks. We are joined by Marcus Hansen, Portfolio Manager at Vontobel Asset Management. Thank you very much indeed for joining us.
Thank you for having me, Andrew. Good morning. Happy New Year.
Happy New Year. Start off, please, with your thesis on Richemont, the maker of jewelry. What attracts you to this name?
Absolutely. So just to be clear, Vontobel Quality Growth, we're a global asset manager. So we're always looking for fantastic franchises and brand companies, which can complement, good performance in U.S. assets as well. Keep in mind, we're looking also at diversification. Consumer discretionary is an area we find some great franchises. And so coming to Richemont specifically, this is a Swiss-based company, which is a holding company for two major assets, one being Cartier, the other one is Van Cleef & Arpels. So two of the iconic top brands in jewelry. It's a 120 billion market cap company with about 26 billion of revenues. 80+% of the earnings come from the jewelry business, which is benefiting not only from a long heritage, so there's a proven track record here of over 100 years. We look for good proven track records, but more importantly, pricing power and strong demand as we see jewelry moving more and more towards branded. Good delivery, good execution, we think is a great one to have. And this is a company which is part of the whole luxury high end, very much is a combination of controlling demand, keeping margin, and growing returns.
The chief financial officer at the end of last year apparently warned, though, that higher prices for precious metals are putting pressure on profit margins. That doesn't turn you off?
Not at all. If anything, actually, we think the move in the precious metals market, because there's a combination, they have the ability to hedge going forward and they lock in some of their supply, is actually maybe driving some of the attraction in jewelry that we are seeing versus other consumer discretionary high-end spending. It's interesting also to note that despite these companies, Cartier itself has been around for 150 years, Van Cleef just over 100 years. They do constantly innovate. And in fact, their new love bracelet, Cartier is renowned for a bunch of different things, but their love bracelet is very famous. They have a new version which continues actually to outsell. And there's been issues actually getting that. So that allows them to have pricing power, which more than offsets what we think would be some of the margin pressure.
Your next idea has that evocative ticker symbol in America, RACE, Ferrari.
Yeah, you couldn't pick a better symbol, right? Ferrari's been around for 80 plus years. Effectively, it's a luxury goods company that happens to make cars, so things on wheels. But really, if you look at the remit of its P&L, its returns, its margin profile, it's very akin to some of the top iconic luxury brands. This is a 66 billion market cap company, revenues of about 8 billion. And the story here really is a controlled volume management of this business over time. They could sell more cars tomorrow if they wanted to. They don't, primarily to retain the exclusivity, but also they're aware of the fact that what they're creating here is a very valuable asset going forward. Obviously, a bit of a lackluster 2025, but if you look at the track record here of 3, 5, 10, 15 years, the performance is phenomenal. And we think this will be another one which also benefits from what we're continuing to see is good spending on the high end, but also demand for quality, unique assets going forward.
And then your final name also involves fast cars, a Formula One group. I guess we're not going to be buying these cars, but they are part of the whole luxury ecosystem.
Yeah, so again, coming to consumers' discretion, actually, sports franchises in particular are very interesting. They're very unique. And it's very hard to actually find sport franchises that both you can invest in and also are profitable. Traditionally, actually, things like teams don't actually make a lot of money. Formula One is very interesting. Formula One has been around since 1950. And here what you're buying is an asset which was part of the Liberty Media Group, which was originally a tracking stock. And this is a new investment for us. We liked it because they converted it into an asset-owning operation. So the F1 Group basically has the right to manage the F1 Formula One racing brands around the world for a long-term commitment. They make their money in three ways. One is they host races. So cities around the world bid to host races for a number of period of time. There's 24 races every year. The race season runs from around March to December. They also make money from TV media rights. Depending on the numbers you look at, this is the third or fourth most watched sport on the planet. Obviously, there's the famous F1 race in Montreal, but in the United States, it's really been in the last 3-5 years, they've expanded to add a total of 3 races. But outside of North America, this is phenomenal following. And the third area is sponsorships. If you remember when we were kids, most of the sponsorships you saw on F1 cars tended to be tobacco or car and auto parts and oil companies. Mm-hmm. Now the sponsorship has really expanded to include consumer brands all the way from LVMH to Google and other tech companies. And the viewership has also expanded globally as well. The other kicker here which is interesting, is that they also acquired MotoGP, which is almost the Formula One equivalent of two-wheel motorcycle racing. That became part of the group at the end of last year, represents about 10% of the revenue base. And we believe they're going to do similar things with how they expand that franchise going forward as part of this Formula One group. So again, we're looking at a business about 25 billion market capitalization, greater than 4 billion of revenues. And we think those three lines of drivers can drive consistent top line and earnings growth.
I got to admit, for me, car racing is watching paint dry, but it's one of those sports where when you know, I think, what's going on, you get much more pleasure out of it.
Andrew, can I recommend then watching a clip from MotoGP? If you think F1's a bit boring, MotoGP is faster, the overtaking is a little crazier, and the action and the camera angles are very interesting. So again, definitely worth watching. It's a fantastic franchise and again, sports franchises historically, when we look at these things, the value isn't just from the earnings side, but just the following in terms of eyeball and viewership.
That's interesting. So the motorbike racing, you reckon, has it might draw me in?
It might draw you in. So when watch a couple of the races, you'll see what I mean.
That's right. Yeah, I remember in my youth they used to have that motorcycle race in the Isle of Man that was infamous. Poor guys would get smashed up doing it.
Yeah. So fortunately today safety is coming quite nicely, so it's helping a lot. You've seen that on the Formula One cars, also MotoGP.
Yes.
But really, what's very compelling here is just the global nature of the brand and the franchise's reach. We don't think is reflected in the current valuations.
Marcus, thank you very much indeed.
Welcome.
Marcus Hansen, Portfolio Manager at Vontobel Asset Management. We got the TSX in record high territory. We're going to do a final check on the markets when we come back. Let's have a look at the markets before we go. We'll start off with the TSX because sure enough, it's in record territory today. It did briefly go negative, as you can see, a little while ago, but we are on course for a record high close for our market, even though we're off the highs of the day. Yep, 32,235. So the TSX continuing its winning ways so far in 2026. One stock of interest, though, Constellation Software. This one under fresh pressure today. What a disappointment for investors. Numerous guests over the years have told us, well, these people have proved their mettle with a string of acquisitions of smaller software companies over the year. But so far, according to my Bloomberg screen, in 2026, Constellation Software is down 5%. One of the worries here is that the whole software business is going to be in turmoil here with the advent of artificial intelligence. That's amazing. And of course, the renowned founder of the company stepping back, I think that's adding to concerns. Some stocks that are winning today include Lithium Americas, and there's First Majestic Silver and Bausch Health. And now I believe there is some news about Lithium Americas. There are hopes, of course, that a glutted lithium market will expand enough, demand will expand enough to soak up the supply. Of course, the Chinese have been a dominant player there. But there's Lithium Americas moving up. Actually, I'm sorry, I don't think there has been news on it today. And let's have a quick look at some stocks that have come under pressure today. Interestingly, we are seeing some selling in Celestica. It's always volatile, but anytime we see any concerns over an overhyped AI market, we tend to see pressure on Celestica, although NVIDIA is up about $2 today, so that there aren't concerns on that chip flagship. We're also seeing some selling in Finning International and TransAlta. And maybe a quick look at Suncor. Suncor saying it's achieving targets a year earlier than expected. Investors seem happy. Precision Drilling planning big write-downs, but investors didn't seem too worried on that story. Thank you very much for watching The Open. Morning Markets is up next.